Hey there, traders. Welcome back to today's recap. Today is Thursday, August the 7th. We opened with a gap up, well above the trend line, but it didn't last very long. They fell right back down out of the gate. It's actually known as a gapping crap. Where did they go? They hit the trend line. The trend line acted as support, still important. We will circle back around to this daily chart at the end to dig into what that might mean going forward. This morning's daily levels and game plan went up around 9:12 a.m. Eastern. We noted that price still looked like it wanted to climb inside that big breakdown candle from last Thursday and Friday, but it was still in the middle of stuff. There was a zone between 637.52, 638.10. That was identified as pretty good overhead resistance if price made it up there. And in the same neighborhood, we had another level underneath that added the case for resistance in that area. Reminded everyone about the bearish consolidation. It's been in development. The higher price climbs inside that breakdown candle, the more likely resistance will show up. So we said that in the morning. On the downside, we said that the trend line should act as good support if price fell. And that 632.69, which is above the trend line, it was basically around the close of yesterday, could be support as well. The bear axis still is at 627.50. In other words, if the bears got below, closing below that, will put the bears in a better position to push price lower. So that's what we were working with going into the morning. Here is a screenshot of what the levels look like plotted in the morning before the market opened. Of course, here's the full 1-minute chart for the day. Following the 15-minute rule, the first official base hit came on the short side at 636.53, right there. Pretty obvious to see. A short trade for at least 4 points or more if you were able to get that. They came down into 632.69, bounced there. That's your second official base hit. We had a near miss of the recycle of this. Even when you were to pull this down, what was that, 695? So 632.64 would be 5-cent buffer from the official level. And it was still not close enough to get pulled into this trade. A little bit of a heartbreaker. They fell away. Kind of the same thing with the next two levels. This trend line, the low down here at 12:47 p.m. was 630.07, and it was probably somewhere in the neighborhood of 10 cents away. With that kind of reaction, especially when you have kind of a bearish trend, or at least the day feels kind of bearish at this point, would you want to trust that level again for the second attempt if they came back down to it again? Now, if it's just a regular level, probably wouldn't do it. With a trend line, it's a bigger deal. It comes from longer-term data. But still, if we're going to play by the rules, we're going to say that's a near miss. We're not going to trade it, although they did bounce there. And then here's another heartbreaker. The actual level for the morning was 629.05. I already have it pulled up. So here's the official level, 629.05. And if you pull this up toward price with your 5-cent buffer, you'd be at 629.10. Where I had it already. And look at the low, 1 penny away, 629.11. And they took off. So no trade. That's a near miss. We're pretty clear to see that this level was important. So net, 2 official base hits. One there, one there. So I have a question for you. If you had these levels from the morning, do you think you could have found some profitable trades today? At least 1 or 2? I'll just put that out there for you. Right after I posted the levels and the game plan this morning, I got pulled into an important conversation at the office. So I did not get back to my screens or start this screen recording until after 10 a.m. You can see the clock down here. It's 10:10 a.m. And so I started the recording, saw what was going on. So I missed the opportunity up here. I didn't trade anything at 636.53. What I did do after I saw them pause here a little bit, I just jumped on board, and this time it worked out for me. Sold 6 contracts and pulled 8 points on their way down. I really didn't want to hang around until past 11 a.m. or so. I had some other things to do. So I just called it a morning after that. Nice little trade, $2,400 before commissions. And I let the screen recording go for the rest of the day. I think I'm going to stop doing this. I'm just going to maybe stop the recording after I get any trades that I think are good enough for the day, or at least stop it around 11 or 11:30, because it would be nice to kind of have my computer and real estate back to work on other things. But this does show you guys that I'm not involved in the market very often at all in the afternoons. There's really no action to share. It's just to show you that I'm not involved in the market. Over on the tracking logs, it's pretty easy again today. 2 base hits officially. There's your 8 points if you were playing by the rules. You'll read through the notes, but we just talked through all that on the charts. And then over on the Sam's trades is the one trade. I was catching part of that short when they reacted off of 636 and fell away, but where I entered the trade was when this SPY was at 634.07 for whatever that's worth. Just to point that out, got 8 points on 6 contracts. There's the $2,400. So a pretty good morning. Back to the daily chart. So we're still in the middle of stuff and trying to climb the breakdown candle. At least the bulls are. But today's close sits right under yesterday's close. That kind of makes me wonder if that's the bears trying to send a little message that maybe they're not done yet with the downside. From a timing perspective, tomorrow or Monday could be prime time for the bears to try to get back under that trend line and maybe start a leg lower. Otherwise, it's up to the bulls to see how far they can push up inside that breakdown candle. And we'll see if they can do that and get all the way up to the all-time highs. And we can't forget that on this weekly chart, what we were looking at is a potential reversal candle unless we see a weekly close above last week's high, which is officially 639.85. They never made it to 640. So if you see some closes above 640, like a weekly close, a couple daily closes or so, then this reversal candle here on this weekly chart might be off the table. I'm maintaining that the bears probably are not finished with the downside. We will see. Still in the middle of stuff. So that's a wrap for today's market and trading recap. If you're finding these breakdowns helpful, make sure you hit the like button and subscribe. Check out ticksandtrades.com for the full daily levels and the game plan before the market opens. You can learn about it there. And thank you to everyone who is still keeping tabs on this channel and using the levels to help inform your own trades. I appreciate the support. I hope you're making money. See you again soon. Have a great rest of your day.